Today's session is being organized by the Bharat Chamber Ladies Forum in partnership with Bharat Chamber of Commerce. The session will be moderated by Mr. Naresh Pachesia, the Senior Vice President of Bharat Chamber of Commerce and Founder and Managing Director, SKP Securities Limited. Without further ado, may I request Ms. Renuka Shah, the chairperson of the Ladies Forum, to commence today's program with her welcome address and introduction of guest speaker.
Members of the Chamber, members of the Ladies Forum, guests and friends. Namaste, good evening, and a very warm welcome to our event today. On behalf of the Chamber and the Ladies Forum, I have great pleasure in welcoming all of you to today's interactive session on investing globally amidst volatility and uncertainties. Today's session is being organized jointly by the Ladies Forum and the Chamber. At the outset, I wish to extend a very warm welcome to our guest speaker, Ms. Ratna Kakkar, international banker and wealth manager. In her illustrious career spanning over more than 40 years, Ms. Kakkar has held senior management positions across the UK, the US, Africa, MENA, and India. She currently serves as a non-executive director for companies like Century Plyboards, Bikram Solar Limited, VAR Capital Limited, Lux Industries Limited, and the Africa Research Excellence Fund UK. An alumnus of the Indian Institute of Management, Ms. Kakkar has worked in key strategic positions in reputed institutions like the Guaranty Trust Bank UK Limited, Zenith Bank UK Limited, Standard Chartered Private Bank, and ABN AMRO Private Bank in London. Our moderator for the evening is Mr. Naresh Pachesia, Senior Vice President of the Chamber, and needs no formal introduction. For those who are not acquainted with his background, I would like to mention that he has more than 4 decades of experience in the capital markets. In addition to being the founder and managing director of SKP Securities Limited, Mr. Pachesia is also a leading light in family business. Friends, in an era marked by interconnected financial systems, investing globally has become an essential strategy for achieving diversification and long-term wealth creation. However, since the last quarter of 2024, global markets have been facing notable volatility triggered by a complex interplay of factors, including geopolitical developments, economic policies, and technological disruptions. Further, economic policy shifts, particularly in major economies like the United States and China, have also contributed to this global uncertainty. The US Federal Reserve's monetary policies, including interest rate decisions, have significantly influenced global capital flows and currency valuations. Now, with the new US President, Donald Trump, having taken office, markets are already wary of the potential impact of his proposed trade policies, including new tariffs on trade with the US. Similarly, China's economic slowdown and its measures to stabilize growth have also impacted international trade and investment patterns. In the Indian context, despite positive corporate earnings, the market has experienced persistent outflows from foreign institutional investors. In October 2024, FIIs withdrew over US $10 billion from Indian stocks. $10 billion from Indian stocks, marking the largest monthly outflow since the pandemic began. This trend signals concerns about the sustainability of India's stock market rally amid a slowing economy. Last Friday, the equity market saw a sharp decline after 3 days as the Sensex and Nifty fell under pressure from the persistent foreign fund outflows and global complexities. Moreover, the strengthening of the dollar has led to further depreciation of the Indian rupee, which recently fell past 86 rupees per US dollar, marking a historic low. I request Ms. Kakkar to share her thoughts on this in this regard. I would also request her to outline the ideal short and long-term strategies available in the current scenario. Another important issue is that in many countries, investors have turned their attention to Bitcoin and other cryptocurrencies as an alternative investment alongside traditional financial assets. According to some experts, Bitcoin is being acknowledged not only as a digital currency, but also as an alternative investment opportunity and a hedge against conventional financial assets. We look forward to Ms. Kakkar's views in this regard. With these words, I conclude my address and look forward to the valuable insights provided by our financial experts on how we can position ourselves to capitalize on the opportunities that the uncertainty of the global market presents. I wish to now request Mr. Patricia to take over at the session. Thank you, ladies and gentlemen.
Thank you, Renuka ji, for uh, lovely introduction to the topic as well as of our guest speaker, Ratnaji. Ladies and gentlemen, very shortly you will get to know why this an event on this subject could not have been better timed than today. Investing globally amidst volatility and uncertainties. Talking of volatility, Renuka ji mentioned about last few months, but let me take you back to 2020. And the kind of volatility we have seen from then onwards is almost unprecedented in normal times. Of course, those were not normal times. I am going back to March 2020 from a high of 12,000, 12,500. Nifty in India fell down 40% almost to 7,500 in a matter of a few weeks. And with uncertainty of the kind we have never seen in recent times, because there was a lockdown, which we in none of the living human beings had seen anything of that sort, because the last time it happened was in the early 20th century, when the Spanish flu affected people actually, So we had never witnessed what a lockdown meant, and when it will open, when so many other sectors of the businesses will come up, and that was the uncertainty about that volatility, kind of. And after that, there was a one-way ticket. People sitting at home just realized that that's the best thing to do, is drawing salaries and making money and still being able to devote time for their newfound passion, that is of investing in equities, which was giving fantastic returns. And so there was this one-way ticket. Okay, in 2022, we saw a small correction and then again a one-way ticket. And of course, as Renuka mentioned, in the last few months, there has been a correction. This time, the correction is bringing with it some sort of nervousness is being created, because now people realize that India's GDP growth rate is slowing down, in spite of we being the largest, fastest growing large economy, but it's no more around 8% plus. It's coming down to 6.5%. And that is having an impact on the corporate earnings also. And so then we have to adjust to this reality. And with, again, so much of uncertainties and around us. But more of that later. So obviously, when we are talking of equities, we cannot ignore the volatility and the rise of Indian small cap. Indian mid caps for many years have been one of the best performing asset class globally, but small caps. So last 2 years, if you see, last 5 years, 4 out of 5 years, Indian small caps and mid caps have been amongst the top performing asset classes. Okay. And so when we see after this stupendous run, when we see this nerve-breaking corrections that we have seen recently, that actually unnerves everybody, when the strongest of investors. Okay. So suddenly large caps are coming into fashion. Okay. While we are talking of Indian equities, we have this S&P 500. As they say, you cannot ignore America. Okay. And there is S&P 500, which has in these last 5 years also been in the four or these 5 years amongst the top four performing asset classes, normally which we tackle segments which we tackle in India. Track in India. Okay. And so it has always been there. And so in a way, story of US markets have been same. Then uh, the recent volatility about which we were talking, which has been coming up because of interest rates going up, many, many factors. I'm not going into details. I'm sure Ratnaji will be touching some of them. And come fast forward today's volatility. There was a meme that which got circulated today. By the time I went for lunch, market after a dip had gone up like this. By the time I finished my lunch and went back to my seat, it had come down like this. So the meme was about that pole vault. Somebody doing that pole vault and then coming down. It was being circulated in social media. And so this is the kind of volatility we are talking about. And to say this is just one asset class we have spoken, that's equity as an asset class, which is for long-term wealth creation as an asset class. Then we have debt, fixed income as an asset class, good for capital preservation or regular income generation. Even that, when after the pandemic, when interest rates crashed, debt market, everybody made money because of the falling interest rates, debt mutual funds and others did well. On the other side, when now the interest rates are were going up, and suddenly you see all the debt funds and all that we were expecting 7 to 8% return, all crashing down to less than 4%, less than 5% return. Money markets doing better than that. And then out of this, gold. Gold is supposed to be an asset class which, when nothing else works, gold works, as they say. Best hedge against all kinds of risks, be it geopolitical risk or macroeconomic risks. Okay. But what we saw in the recent past is very different. Equities was booming, so was gold booming as well. So the fear came, if equities crash, if gold was also crash, where is the safe haven then? Okay, where do we go if that were to happen? And now the biggest uncertainties, Trump. Okay, and the most powerful man on earth, the only certainty about him is his uncertainty. Only predictable thing about him is unpredictability. Okay, so where do we go as investors? And that is why I said this is the perfect setting for a speaker like Ratnaji, who has years of experience of investing, of investments, not only in India, but on a global platform. So with these words, Ratnaji, I open to you for your expert opening remarks, and share your wisdom with the group here.
Thank you so much, Mr. Naresh Bhatt. Thank you so much for this wonderful introduction and for your wise words regarding the current volatility that we've been experiencing. And let me just say that I'm truly honored to be amongst you all today. Just to give you a little bit of background about myself, which will put everything I'm saying in context. So I joined HSBC as the first female management trainee in India in May of 1980. So that's a long time ago. It's over 40 years ago. And quite honestly, that was a huge milestone for the bank and for India because they didn't have any facilities for women. They didn't have female toilets for managers, for instance, very basic things. So I've always had to fight my way through and break lots of ceilings, not just glass ceilings, but concrete ceilings. So I have the most wonderful memories of HSBC in Flora Fountain in Mumbai. And it taught me that persistence and a willingness to just be resilient and just push quietly is worth a lot in volatile and uncertain times. As you all know, we are all veterans of volatility because we've been through COVID. And as Mr. Pasichia said, it has been something that has not been witnessed for over 100 years. You know, the whole, what we went through and the subsequent PTSD that we are still currently dealing with is something that, you know, is not very often talked about it, but it's made us veterans of what to do in volatile situations, not just in terms of investing, but also in terms of life in general. So I begin my talk, I wouldn't want to call it a presentation because I believe that with the advent of X and Instagram, knowledge, factoids are ubiquitous. It's available at the press of a button. And very soon, you know, AI is going to make most of us defunct. So I think just knowledge and, you know, rattling off numbers is not going to hack it anymore. So emotional intelligence is what is going to come into play, and that's what's going to help us to actually deal with volatility, not only in terms of the market, but also in terms of life. And the reason I keep talking about life is that investment is a risky business. Okay, that is a given. Not all asset classes will perform to the level that you expect. Some will outperform, some will underperform. So risk is a huge part of the investment pathway. And in the words of Warren Buffett, be fearful when others are greedy and be greedy when others are fearful. So volatility also presents great opportunity. So what do we do when markets are volatile, when there are events, black swan events, geopolitical events, you know, corporate news coming out, and that causes, you know, stocks and shares to either go up steeply or go down steeply. So we are in a situation where things are not as we expect. We get up in the morning, we expect everything to sort of, you know, be tickety-boo and go along a certain pathway, and it's suddenly not doing what it's supposed to do. So simple but true, don't lose your head. Don't panic. Remain calm. Take a deep breath. Say your omkaras. Call your financial advisor. So point one, be calm. Don't panic. Don't do knee-jerk reactions like, oh my God, let's sell everything, exit the market. Don't do that. I think the first thing is remain calm, be in the market. One of the first things is that we can't time the market. We cannot time the market. Anybody who tries to time the market will fail. The only thing we can do is to be in the market, remain invested, remain calm, call your financial advisor. He or she is there for a very good reason because they will take the emotion out of the equation. They will, you know, you're emotional because you've invested, you know, you're investing for your children, you're investing for your grandkids, you're investing for a wedding, or you're investing to, you know, build a corpus of funds because you want to buy your dream home. So you're emotionally invested in the performance. Your financial advisor is less emotionally invested, but they are very invested in the numbers and to delivering the best possible return for you. And they may have things to say to you which you may not want to hear, but it is like medicine. You know, they'll deliver it with a spoonful of sugar. Take the medicine, which is the advice. So remain calm. Speak to your financial advisor. That's one. The other thing is, investment is a long-term proposition. The minute we start thinking about it as a very short-term proposition, we are in dangerous territory. So I think the best possible thing to do is to think long-term. So what do I mean by long term? I really mean 5 to 7 years plus. So think long term, invest as early as possible. And the numbers to back this up are available. Just Google it. Why should we invest long term? And they'll tell you, because of simple things like compound interest, for instance. The miracle that is compound interest. If you invest early, if you start investing in your 20s, a small sum of money will grow into an enormous sum. So, do the investment early and invest steadily over a period of time, and try and get the benefits of the compound interest, and don't start taking money out. Let a certain sum be just in your investments, invest, and just forget about it and wait for compound interest to take care of it. Again, Warren Buffett's golden words: if you don't feel comfortable owning a stock for 10 years, you should not be owning it even for 10 minutes. So fundamentals are key. Don't do knee-jerk reactions that, this seems very stylish. It's a really nice thing to own. Let's just go for it, gangbusters. I'll come back to the passion projects and how to invest in things that you really love or you feel a yearning for. And I will come back to the passion project, and I'll handle it under the heading of alternative investments, passion projects, and ethical investing. Okay. But for your portfolio, and I'm assuming that, for the most part, unless you have a very high risk appetite, and I'll come on to risk, you will probably have a look to see that, it grows in a sustainable way. It grows steadily over the medium and long term. So you should feel comfortable about what you're investing in. That comfort level with the stocks and the bonds is very, very important, and it also will tie into your sense of where you are in the world and what your belief systems are. You may think that, I'm vegetarian and I don't want to invest in a stock which is heavily into meat products, or I'm a teetotaler and I don't want to invest in Diageo because it deals in alcohol, for instance. So you have to be comfortable about what you're investing in, because, money, even though it's just rupees, it has an aura and it casts a long shadow over generations. And I know it sounds a bit woo-woo, but it's not. So I think tread carefully. Okay. In volatile times, again, things may go up, things may go down. And we somehow never talk about things going up. And I have a nice story to tell you here, because in all banks, and I'm mentioning, HSBC and Barclays because these are two banks where I spent a long time. We used to have, in private banking in London, an extremely detailed risk assessment strategy. So a client comes in, they have $10 million to invest. I, as a relationship manager, will sit with portfolio managers and my team, and we'll do a detailed risk analysis. What is your age? What are your family circumstances? What is your net worth now? What is your investable assets as we speak? How much do you want to invest over what period of time, in what? What are your expectations? And this is where it gets very interesting, because then you're taking them through lots of questions like, okay, so you have 100, and over 6 months, that 100 becomes 80. Are you going to be disappointed, extremely disappointed, close to nervous breakdown? Invariably they'll say disappointed. What is your risk appetite? High risk appetite. So on the basis of that, one long gatha will be written, the client will sign, we will sign, client goes off, we invest the money. Lo and behold, if it goes up by 10%, nobody will pick up the phone and say, well done, that was fantastic. However, if it goes down, God forbid, by even 2 or 3%, they will be knocking on the doors, they'll be demanding meetings. What happened to my money? And then we'll say, but, sir, this is your risk assessment. You said that you'd be comfortable if the thing went down by 10% over 6 months. I don't remember having signed it, but you did. oh, I don't know how I signed it, why I signed it, but my money has to be guaranteed. So what I'm saying is we're all human and we actually don't deal that well in broad terms with volatility and with losing money. So in volatile times, when, say, for example, your portfolio has gone down, do a understanding and rebalancing of your portfolio. Look at your portfolio, sit with your financial advisor, go through that risk assessment all over again, just to comfort yourself that I was comfortable with, the portfolio going down by this much over this period of time. And it's a check back. So you sort of develop a little bit of comfort with that. And then you align your risk assessment with what is going on in the market. And then take a deep calming breath and see whether there are short-term opportunities to pick up more stocks on a dip. Because if you want to grow the portfolio, there are opportunities when the market is volatile and the market is dipping. So buy on the dip, add, don't sell, don't do a panic. Let's get out of the market, because be in the market, don't time the market. This is the one thing which I keep saying, that think long term, invest early, invest often, and wait for the market to recover, because in most instances, markets recover. Okay. Right. I want to talk about diversification at this stage. So if you are diversified, then volatility will impact a little bit less. I'm not saying that it won't impact, but it will impact a little less, because if you are diversified across product, so you have equities, you have bonds, you have mutual funds, you have all these in India and abroad with the best fund managers, then some will survive and some will thrive and some will go down. So hedge your bets and diversify. Diversify, not just across equities and bonds in India, but with the benefit of schemes such as LRS. Take advantage of it and invest abroad. And I'll come back to that. This is something that Nareshji and I were talking about, that the LRS scheme provides a wonderful window of opportunity for investment, which gives you immediately a diversification in terms of geography. So you're investing abroad and in currency. So, you're hedging against the rupee. You might be investing in dollars. You might be investing in sterling. You might be, diversing into an asset class such as property abroad, which will, appreciate over the course of time. So please diversify. I mean, I know we all have our own strategies. Some people still love quite a bit of cash. I don't know why, but they do. Or equities, because equities have traditionally outperformed every other asset class, over a rolling period, barring none. So there is that faith that equities will outperform. But I think diversification is absolutely key. And in terms of diversification, let's think in terms of diversifying into something which gives us joy, which sparks joy. So in terms of Mary Kondo, in terms of decluttering, diversifying also means dropping something and adding something. So she talked about decluttering and, keeping things that spark joy. I think when you diversify, keep things or add things which give you an element of joy. What do I mean by that? That in any portfolio, I always advise clients to have between 10 to 15%, depending on where you are in your life, to have in alternative investments, which are passion projects. What do I mean by that? So things like art sparks joy, may outperform a lot of asset classes over time, may. And I have had artworks which have outperformed the equities over a period of time. So, things that I've bought for X have been valued and sold at 100X within 10, 15 years, okay? And I'm not saying put a large sum of money. However, do think about putting about 10 to 15% in things that spark joy. Could be art, could be lithographs, could be rare books, could be rare textiles, could be, let me see, could be investment into companies that are promoting ideas, education of the girl child, Baat Ki Baat, preservation of artifacts within India. Again, an example, which, which give you joy and which may, yield a reward, financially also. So this is where you can put money into, where you can go in as angel investor into something which is in a sustainability project, which has something to do with, heat or solar energy or whatever gives you a mental satisfaction, because it is something that appeals to our inner self, because it grows the money, but it also feeds your sense of self-worth. Maslow, one of the things we studied when we were doing our MBAs was, human beings have various needs. So at the very basic, it's, roti kapra makan, it's food, shelter, humanity, then social connections, and then the last thing is the growth of spiritual awareness. It is self-actualization. So the alternative investment thing in terms of volatility, in a time of volatile situations, do think in terms of saying to yourself, all right, times are volatile. I may lose this money, but my God, if it does work and it does come up, I will be doing something good for myself because it will give me joy. I'll be doing something good for society, and it will grow in the long term. Yeah. So diversify, but diversify with an eye on the prize. And the prize is not just money. Of course, it's money, but it's not just money, because the world is changing swiftly. Okay. On the note of diversification, one of the best ways, as I said, to diversify is to invest with the best fund managers all over the world. Okay. Don't just stick with one or two, stick with 3 or 4 of the best players, the biggest players, and also with 1 or 2 fund managers who you trust. Because the one thing that I've noticed amongst private banking and financial services is, everything else being equal, clients will invest with the fund manager that they like and trust, because we're human beings. It's not just about the numbers. We do have to have a special bond. So if your fund manager is somebody that you trust, place money with them. Yeah. Now, one or two other things that I wanted to say. Long term. In terms of staying invested, I've always said, keep some cash aside, a little bit of cash aside just for the short term, but don't hold on to cash, because cash is just going to deplete your portfolio thanks to inflation. So I think that's something that we all take on board. But, in terms of actually doing it, sometimes we forget and we, try and hold on to cash. But cash is not an asset class that we want to hold on to. So equities have outperformed all other asset classes. So do hold on to that as a thought. So just in terms of numbers, on a 5-year rolling period, equities have outperformed all other asset classes by 74.2%. On a 15-year rolling period, 91% of the times it has outperformed. So I think equities is something that we do have to look at. In terms of the outlook of how our properties or how our portfolios may fare over the next 10 years, I'm just referring to Vanguard, which is one of the world's largest asset managers. And broadly, they've said that the higher the allocation to shares, the higher the expected returns. So shares again, equities again, is the asset class that's expected to outperform all others. And a 60% shares portfolio. So if out of 100, 60% is invested in shares and equities. It's expected to give a yield of 6.6% on an average. Broadly, it can go between 2.1% to 11.6%, but the average is 4.8 to 8.6. This is what we are looking at. But of course, the actual rate of return is, net of inflation. So you have to take into account what the rate of inflation is wherever you are. And always bear in mind that falling and sideways movements in markets present a buying opportunity. So don't look for the downside. Let's remain optimistic. Let's have an ethical point of view while investing. Have a passion project, because I strongly believe that that will give a bit of warmth to what is otherwise a very dry subject. It can make your pulse beat a little faster when you get up in the morning and you see your portfolio has gone up. But in times when it's going down and it's volatile, you'll have the comfort of knowing that I've invested a part of my portfolio into something where I will be giving back to society, or where if it works, then it might become a supernova. So that is something that we must bear in mind. That broadly is what I had to say. I would like to make it as interactive as possible. Naresh ji is going to, have some comments and questions, and then please feel free to ask. I have lots of little stories that I can tell you of private banking and asset management in the UK.
Thank you, Ratnaji. Give her a big hand, please. It was a fantastic, the way you mentioned simple things about investing, which is very, very important, actually. Actually, investing is very simple, but we all make it complicated. And what Ratnaji has done is by giving you an insight into certain simple ways of investing, on the other hand, certain intricacies, more towards investor behavior. So this was fantastic, with some Warren Buffett quotes coming in. And one of that reminds me when you said investing is a dry subject, So, yeah, Warren Buffett also mentioned on this note that you can either create wealth or create excitement. You cannot do more, both. Because creating wealth is also like, it's like watching the grass grow. Now, how long can you watch the grass grow? So slowly that you suddenly get bored. But if you can have that quality, things will be. So well said, Ratnaji. And what you mentioned about, when you talk to clients, they have mentioned about returns expectation and risk, I'll say that point, हम जब यहाँ पे बात करते हैं लोगों से कि आपके रिटर्न एक्सपेक्टेशंस क्या हैं, तो बोलते हैं ज्यादा से ज्यादा. अच्छा, आपकी रिस्क टॉलरेंस कितनी है? कम से कम. बोले ये कैसे हो सकता है भाई? हेड और टेल तो अगर ये ज्यादा होगा तो ये सो ऐसा कैसे हो सकता है? तो फिर भी हम लोग उनसे पूछते हैं, क्योंकि एक थर्ड फैक्टर है टाइम होराइजन का, जो रिस्क और रिटर्न को ऑप्टिमाइज करता है. तो हम बोलते हैं टाइम होराइजन आपका कितना है? तो बोलते हैं जल्दी से जल्दी. ये तीनों तो मैच बिल्कुल नहीं कर सकते. सो यू कैन अंडरस्टैंड that why remaining that much disciplined, as Ratnaji said, was very important to to the process of investing. Ratnaji, let me open the Q&A for you with one question. You did mention about investing globally. So, of course, I did mention in my opening, my introductory remarks to you that, again, as Warren Buffett says, that you cannot bet against America. Okay.
Mhm.
So S&P 500 was it. I don't know, ladies and gentlemen, how many of you know that FANG was the best performing asset class available in India as a fund of funds, actually. The FANG fund was the best performing fund in India for the year 2024, calendar year 2024. And I'm sure it was one of the best performing asset classes globally. And then there is Russell 2000, which completes 2000 of the top American companies. So that's US. But when we talk about global investing, at a time when Europe is going through its difficult period, UK may not be too different than that. Uh, uh, China is having a slowdown. However, Hong Kong Stock Exchange is still not doing very badly because the Greater China things are doing well. And then you have Latin America and other opportunities. So, could you throw some light on a couple of geographies at least outside India? देखिए 2 साल तो इंडिया में किसी को फुर्सत ही नहीं थी इंडिया से बाहर देखने की, ठीक है। यहाँ पे इतना पैसा बन रहा था कि किसी को मतलब ही नहीं था इधर उधर देखने का. बट नाउ व्हेन थिंग्स आर लाइकली टू बी टफ in the year 2025 for investing in equities in India after 2 brilliant years, if one was to diversify, geographically, a couple of geographies, and you can mention and why.
Okay.
Yeah.
I'll mention a couple of geographies and a couple of asset classes. One is that I think UK Central London property is a very safe hedge against any kind of inflation, any kind of recession because of the supply demand imbalance. Okay. When it comes to property, it's location, location, location. Central London property has shot up over the last 10, 15 years. And I would strongly recommend, because we have an affinity to going to London, our children sometimes go there. It's a nice midpoint between India and the US. I think while the UK is obviously going through some very tough times with the current government and the economic downturn and so forth, specifically, UK Central London property is an asset type and location which I would still strongly recommend. So do look at it because under the LRS, a family of 5 can take 250,000 US dollars per head per fiscal year. So you're already in the ballpark. So I think that is something that I would look at. And really, in terms of volatility, people always go to the dollar. So you can't ignore America. So do look at America. These are the two places that I would still recommend.
USA for equities.
USA for equities, yes.
So your experience between S&P, because we have S&P 500 and FANG available here.
Yeah.
And is there any other way of investing in US equities according to you?
I think these two are very good. I think just stick to these because these are tried and tested. It gives you access to the portfolio, the basket of equities. So just stick with that. I mean, you have to have some element of the US dollar. Can't bet against the US. Can't, in terms of the way the GDP structure globally has always been, for the last 20 years. So one must include it.
So, ladies and gentlemen, the floor is open for some questions for Ratnaji. Would request you to be a little brief and not
yes.
make statements. Questions? Any questions? Anybody? So, yes.
My name is Ramakant Mahavar. I've been investing in India only, and I've got global exposure through mutual funds only. What are the other ways if I can directly invest, or can you throw some light on that? Because only global investing I do only through mutual funds.
I think that's a very good way to invest globally, because via mutual funds you have access to all the shares, and you don't have to do stock pick, and you don't have to do the
Right.
the full research. So I think that's a very good idea. Again, I come back to, I think property is a very good investment. Abroad, it's something that you can look at only if you travel there, number one, and or if there is a life event such as children going to study there and so forth, which is usually how clients come and say, we want to buy. And I've seen this globally, clients from Africa, clients from Southeast Asia and so forth. It's usually because the children are going to study there, then it provides a base, and then they buy something, and lo and behold, in 5 years it's doubled in price.
Yeah.
So, that's another thing that you can look at. But otherwise, mutual funds is the way to go.
Because mutual funds investing in global market, we have only fund of funds.
Yeah.
We don't have direct equity funds. So the taxation is debt taxation in that,
Yeah.
right?
Yeah. So that too, there is that other challenge that right now all the mutual fund industry's quota of what the limits to which they could have invested abroad, that's all full. So only if somebody makes a redemption, then if you are in the queue, you get into to be able to buy. That's very, very difficult right now. So that's the challenge right now. Otherwise, that was the best way, because fund of funds are investing in ETFs abroad, and those ETFs are low cost funds as well. So you could have easily done that. But otherwise, as Ratnaji mentioned, if you can think of sending some money abroad through LRS, and then invest directly over there, that is also a good way. Then there are fund of funds very limited in India right now. For example, today in the whole of Europe, if there is, Ratnaji, if you can correct me if I'm wrong, if there is one island of hope in that whole place is Switzerland. If you want to invest in a Switzerland equity, now that's not available in India. So how do you invest? So you have to have money abroad to be able to do that, and that's official. So
One of the ways of investing in property is if somebody is working over there, family member is working over there,
Yeah.
then he's earning in dollars, he can buy property over there. That will be better way of investing abroad, right?
yeah.
You can invest in your own name these days.
Okay.
Even as a resident Indian,
Okay.
it's not an issue.
Okay.
So,
Thank you so much.
Yeah.
hedge. You have to hedge. I mean, it's high cost, but you have to hedge against the currency.
And what strategies do you recommend for managing the impact of geopolitical instability on international investments?
Pray. No, but seriously, there isn't a whole lot that you can do. I mean, that is the risk that you take, which is why you have to diversify in terms of geographies which are seen to be safe. So don't invest in locations which are due to go in for a war. Do invest in geographies which are absolutely stable. I mean, Switzerland, for instance, completely stable. So in terms of geopolitical uncertainty, just look for countries which have had a relatively stable political framework over the last 20 years. Don't go in for countries which are going to go to war. I mean,
that means China or the UK or the US are out.
no, I think no. I mean, I think UK is still a safe bet.
Now,
Yes, it's still a safe bet. That country has not been attacked for a very, very long time. So, and the Second World War, they saw off. So I would still not write them off. No.
And that's very interesting question that you asked.
Yeah.
So any other question coming up? Yes, please. Yeah, mic for him. Idhar.
Good evening, ma'am. My name is Siddharth Verma.
Hello.
So, when you are talking about investing in central London property, you share the same view about India?
Indian
I-
property.
Investing
Property.
in
Property in
residential properties or commercial properties in India as a
I
way
would-
of diversification.
100%. Yes, why not? I think in India, you have to be careful in terms of who the promoter is and of course location. And I think the quality and location is key, but definitely yes, because there is a boom in building. There is again a supply demand inequality. There is a huge middle class, a very affluent upper middle class. So things are moving, prices are moving. Even in Calcutta, which was stagnant for a very, very long time, prices are going up. So yes, I would invest.
And it would generate similar kinds of returns.
Sometimes more. But property, although it's a wonderful asset class, is expensive to buy, expensive to sell, expensive to maintain, and it's taxed. I think in terms of your principal private residence, where you intend to build up your family and you intend to stay, and that's the roof over your head, while notionally it's an investment because over a period of time it will go up, it's really where you're going to live. So don't look upon that as an investment because you're not going to sell it, for the foreseeable future. So in terms of investment, look for possibly places which are close to university towns, which is what people do, say, in the UK or in the US, and buy maybe a 1 BHK or 2 BHK, which is where there's a huge demand. People want, to buy. And those are lower outlay, and you can flip it after a few years. And that is an investment because you're going to sell it.
Lovely. Thank you. That आपने Renuka ji, your question that you post to her and her in the context of a reply, small trivia that I can share with you is that one of the top performing emerging markets globally in the year 2024 was Pakistan. Are you likely to invest there? So that's
Safe haven.
So you have to be at the, kind of.
Yeah.
Any
Look for
other
countries-
question?
Yeah, look for countries who are not going to war. Simple.
From digital payment, revolutionizing finance, to AI transforming productivity.
Yes.
These sectors are driving the future of the future economy. So for Indian investors, this is a unique chance to tap the global tech boom. Now, what key strategies should they adopt to identify the most promising companies for sustained growth in this space?
Excellent question. I'll tackle specifically AI, okay, because AI is a trending topic. I think it's going to change the way we live. Just as 20, 25 years ago, we didn't really understand what the World Wide Web was going to do. And, that it was Pandora's box and we'd opened it. And then lo and behold, the genie was out of the box. The genie is out of the box in terms of AI because the person who invented AI, he's an English gentleman. For the life of me, I can't remember his name. However, he exited one of the bigger companies where he set up AI because he said that the scary thing is that it's unregulated. The sector is completely unregulated. And the second scariest thing is that artificial intelligence, the robots are going to be able to feel. They can already think. They can outthink us, but they are going to have the cognitive capacity to actually feel emotions. And if that doesn't scare us all, I think it should. Because if that were to be true, then we comfort ourselves by thinking that AI is going to take away a lot of jobs and employment, but it's going to be at the lower rung. It's going to be for oh Alexa, please tell me what is going to be the weather scenario for the next 5 years. So broad-based things. But if AI is going to be able to feel, then it's going to be able to write literature. It's going to be able to write, drama and screenplays and that sort of thing. So where we used to comfort ourselves by saying that all the clerical level work is going to be siphoned off by AI, but don't worry, emotional intelligence and creativity is a safe bet. So teach your children to go and be film stars, or start writing novels. I think in terms of all of that, in the short term, to answer your question as to what should our strategies be, I think invest in AI companies that are going to take away the lower level jobs, because that's going to get you the money purely in terms of investment. So in terms of simple things like, the note transcription, you go into a meeting, you're talking, and there's an AI assistant that's taking it all down and it's transcribing it into notes. It's posting it into your email inbox. That sort of thing is where the short-term profits will come from. So I would look for those.
In the interest of time, a last question with Ratnaji on a different note altogether. Particularly because this is Bharat Chamber Ladies Forum platform. Ratnaji, you serve as an independent director on the boards of listed companies.
Yes.
How Ratnaji and I know each other is because we are on the board of a particular company as independent directors, both of us. And so in India, there is this huge requirement emerging of, and rightly so, of women corporate directors who are required. So with your experience, I would like to ask you two questions. One is the importance uh, 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 of women corporate directors as you could feel it, one. Two, apart from regulatory reasons. But two is, uh, what do you think does it take for someone to become an independent director or a corporate director on a listed company? What does it take and how to prepare for it? How to think about it?
Excellent questions. I'll- No, no. Okay. Very, very, very pertinent questions. So the first part of your question addresses what do women directors bring to the table as an independent director, notwithstanding the regulatory, the mandate that you have to have a female director. So what does a female director bring to the table? I think it's the left brain, right brain, the EQ of the female mindset, that is important in the boardroom. I'm reminded of what Ginger Rogers said when dancing with Fred Astaire, the very big dancer. She said that, yes, Fred Astaire was a fantastic dancer, but don't forget that I had to dance with him in high heels, a tight skirt, and I had to dance backwards. So what I'm saying is that a female director will bring her womanly mindset into the boardroom, and it's generally an approach of inclusivity. It's a softly catchy monkey approach. So you're more inclusive, you're more likely to have consensus building rather than go in hammers and tongue and be very aggressive or abrasive, or so it's the job will get done, but it may be done in a slightly different way. And I think that is something that a woman director brings to the table. And I think the very difficult questions, purely because the men around the table are such gentlemen, they're not going to shout her down. So you can bring some very tough things to the boardroom and they'll give you a patient listening. And if you talk about it once or twice, they might even listen to you. So that is what a female board director brings to the table, because if you're not part of the legacy and the family thing, chances are that woman has had to work very hard to get there. And she has had to be the best in class, best of breed, best in the boardroom, all the way right to the top where she's of a certain age. And that's why she's there. So I think there's a lot to be said. And it takes a certain amount of courage, a certain amount of drive to want to do that. And I must say that being an independent director is something that I enjoy enormously, because it gives you such a broad scope to meet people of different industries. But what do we need in order to be there? Transferable skill sets. Okay. So you have to have some skill sets that you can take from your, in my case, banking. I've been a banker for 43 years and then moved into being an independent director, and where I'm looking at things which are very different, things like retail, clothing manufacturing, solar panels manufacturing, plyboards. We are giving grants to Central Africa, stuff like that. So you have to have skill sets which, and it's a certain way of thinking that you can pick up from your industry and take to another industry, and you can add value. And that is what people are looking for. When boards hire, they're looking at skill sets. For instance, an ability to think outside the box, and maybe someone who has worked in various continents, so is comfortable coming and talking to people, who are of different colors, different nationalities, you know, different as it can be, and still be confident because they know what they're talking about and they can bridge the gap. Okay. And how do you prepare? One is, it's not for the faint of heart, because it's very demanding. These days, executive and non-executive directors are equally legally liable. So, for much less money. So one has to be prepared for that. And in terms of preparation, you should take the exams, which you need to be a certified independent director. And I prepared also by doing the Global Financial Times Independent Director post-graduation program. It's a 1-year program that you do in London, or you can do it in Hong Kong. So I did that because that brings you up to speed with all the regulations, in the UK. And then I did the exam here as well. I could have been grandfathered in, but I chose to take the exam here. And that sort of gives you an overview of the legalities and the corporate framework and so forth. So I think it's well worth doing. Even people in their 30s and 40s in a corporate career should consider taking up independent board memberships, because it gives you another string to your bow. It gives you another capacity. Even when you're growing your career, we shouldn't just think that, at the fag end of my career, I've done with, the 9 to 5, and now I'll become an independent director. No, I think we should start much earlier. I hope that answered.
Yeah,
your question.
that answers wonderfully well. Actually, this is, I'm sure many people here present, particularly members of the Ladies Forum, would be very enlightened with what you said, because there's a big opportunity actually.
Yeah.
And Renuka ji, just one, uh, you mentioned about Bahu Beti. Now, Bahu Betis, of course, cannot become, technically also, they can't become independent directors, but they can certainly become directors on the board of their family businesses, because as I have in an earlier program of the Ladies Forum, I have mentioned that women in business, in family businesses, often play a very constructive role as that of a CEO, Chief Emotional Officer of the family. So being on the board of the family business, that same quality is brought into the family business, where various members of the family otherwise are, and who may not be such emotionally rich as the woman director can be actually, and that makes all the difference actually. So to have one, and just to take an example, if you have Neeta Ambani on the board of Reliance Industries, see, there is the father, I mean her husband, and three of her children, all three of them, all three now married, of course. So amazing. Just imagine how it would be, kind of for the entire family to have Neeta as the Mr. Mani as the president, as a corporate director, just to give you an example. So even that is very important. But to be able to serve as an effective director, what Ratnaji mentioned about independent director, but even to serve as an effective director on your own family business board, also you need to have some kind of interest and knowledge of the subject a little bit, and bring some kind of depth to the discussions in the boardroom. Otherwise वो फिर वो बहन बेटी वाला केस हो जाता है. Good, thank you. And if no other questions, I would request Mrs. Seth, the Vice President of the okay. Oh, okay.
So, before we move on to the vote of thanks, we have a token of appreciation, a memento for Madam Kakkar. And I would request Madam Shah and Mr. Pachesia, the Senior Vice President of the Chamber, to present the memento to Madam. Thank you, sir. Thank you, ma'am. Madam Sujata Seth, the co-chairperson, couldn't be here with us today, couldn't join us. So, Madam Shampa Ghosh, committee member of the chamber and a member of the Bharat Chamber Ladies Forum, will propose the vote of thanks.
Good evening, ladies and gentlemen. Ms. Kakkar, Mr. Pachesia, Ms. Shah, members of the chamber, my colleagues in the Ladies Forum, guests and friends. At the end of this interactive session on investing globally amidst volatility and uncertainties, it is my most pleasant duty to move a hearty vote of thanks to our guest speaker, Ms. Ratna Kakkar, international banker and wealth manager, for addressing the members of the Chamber and the Ladies Forum and sharing her invaluable insights. I would also like to extend my thanks to Mr. Naresh Pachesia, Senior Vice President of the Chamber, for moderating and steering the discussions of this session so effectively. As global markets face increasing volatility and uncertainties, the need for robust investment strategies become more crucial. While navigating these challenges, investors must focus on building resilient portfolios that balance risk and reward, safeguarding long-term growth. These strategies should be rooted in clear analysis and due diligence, ensuring they operate within well-defined frameworks to minimize exposure to unpredictable shifts and protect investor interests. By adopting a cautious yet proactive approach, investors can maintain trust and security amidst the complexities of the global economic landscape. My thanks are due to the members of the Chamber and Ladies Forum for attending the special session. I wish to also thank the faculty members and senior students of various institutes for their active participation today. My thanks are also due to the representatives of the media for their presence today. And with those words, I request you to join me in carrying a hearty vote of thanks to our guest speaker with appreciative acclamation. Thank you.
Thank you, ladies and gentlemen. We conclude the session here. Please join us for high tea.